Intel stock went absolutely bananas after reporting their third quarter earnings. Let's take a look at the results that Intel reported and what they're talking about for the future of the company. Welcome to the Fiscal Philosophy YouTube channel. For those of you that are new here, I consider myself to be a value-oriented investor. I believe that the old saying, price is what you pay, value is what you get, rings true, and I personally have shares of Intel, so I'd like to jump right in and get into what's going on with Intel this quarter. Intel has been one of my better performing positions in 2023, up 30% year to date. At one point, this stock was below $25, if you can believe it. Now, I'm personally not up 30% on the position because I didn't happen to time the bottom. In fact, I've just been dollar cost averaging in since early 2022. And I am up somewhat just because I was still selling puts near the lows and just accumulated shares along the way. As for why the stock jumped about 10%, it has a lot to do with the beat on revenue, gross margins, and EPS. Intel didn't really necessarily have the best expectations going into this earnings, and analysts were surprised to the upside on all of these metrics. Now, they discussed a lot about reestablishing their leadership. They talked about being sort of the standard bearers of Moore's Law and 5 nodes in 4 years, which they claimed to be on target and all steam ahead with that. They also discussed their mission to be the go to for AI. In fact, they mentioned AI about the same amount as Woody Harrelson mentioned Rampart in his famous Reddit AMA. AI? Can I mention AI? Did I say AI? It was pretty funny, actually. They discussed a lot about the transformation that they're undergoing. Earlier this year, they committed to a lot of executional things, operational efficiency, cost cutting, but staying on track or ahead of schedule with a lot of their company initiatives. They've very well succeeded in all of those areas. And they also talked about, of course, their foundry business, which is supposed to be a very large scale, very global operation, geographically diverse. And of course, we would be remiss if we didn't mention AI again. So they unlocked the value, supposedly, of Mobileye by IPOing it last year. I think the timing was a bit off there, but they're looking at within the next 2 or 3 years also IPOing their programmable chip segment. So this segment of the business actually had declining revenue year over year. So compared to Q3 of last year, the revenue dropped 10%. Now, the fact that the stock still went up after this earnings release makes me think the market was probably anticipating a bigger decline in revenue for this business segment, perhaps. Also, it's worth noting that in spite of the lower revenue, Intel came through with better operating margins on the lower revenue number. So it turns out that in terms of the bottom line, Intel actually did a little bit better in this area thanks to their various cost saving measures and operational efficiency. Another segment that was down was, of course, the network and edge group. Revenue down 32% compared to the comparable quarter of 2022, and operating income down a whopping 91%. This is one of those situations where I think the market was just kind of already expecting bad things here, and it was more or less like, hey, yeah, it's not great, but it could be worse, and probably not as bad as y'all were expecting, right? So I think this got more or less ignored, at least in terms of the price movement of the stock for those reasons. In terms of the revenue in Intel, these are two of the smallest segments, Intel Foundry Services and Mobileye. However, these also happened to be the two that showed the most revenue growth. All right, Intel Foundry Services had revenue up 299% year over year, Now, they're not even breaking even yet on the foundry services. This is a very capital intensive business, and it's one of the major build outs that they're working on. Mobileye, of course, is the company they spun off late last year in an IPO, but they retained controlling interest and revenue was up there too. That's self driving technology. And of course, did I mention AI? Of course, I think the optimism about the future is what really got the market excited about Intel. When it comes to their revenue, they're projecting Q4 to be up 8% year over year, gross margins to be up year over year, and EPS to be up a whopping 193% year over year. I think that optimism about what they're expecting for Q4 is a big driver of the optimism in the market. And I'm wondering if they'll deliver on these. Drop a comment below and let me know if you think that Intel will deliver on those Q4 projections. Analysts certainly have mixed feelings on Intel, with a low analyst estimate of $17 in this 12-month forecast, with a high estimate of $56. The average is running right around the current share price in the mid 30s. Now, my cost basis is slightly below the current share price. I think I'm up like 6 or 7% on my Intel right now, plus the dividends I collected along the way. That wide range of analyst estimates seems to average out to a consensus of hold. However, I did notice this morning that Morningstar had upgraded their fair price to $40, so this consensus may improve in the near future. So, when it comes to valuing Intel, this is one of the positions I've had in my value portfolio for the longest. And, it can be challenging just because they've got so much going on and, their EPS fluctuated wildly, after the end of the pandemic boom. It cratered in 2022 and 2023. That being said, the tail end of 2023 is looking better than expected. So I'm going to make the assumption that the 2024 numbers will play out. There's expected to be quite a jump. And in fact, this outlook actually may improve because of how much better Q3 was than people were expecting. So we'll start from there. Because the jump is so great that I think starting from the 2023 numbers would really throw off any calculation we do that has a steady growth rate. And that's one of the limitations of the model. You kind of have to factor in what you think the average growth rate will end up being over the course of a period of time, and it rarely ever looks like a clean 9% every year or 8% every year, 10%, whatever you put in. But it's just to get you an idea of where the value could be. So I throw in a 12.5% discount rate, which is, again, means that I want an above market return, and I want to figure out what price I can pay today to maybe get an above market return if everything goes well. I assumed 9%, and if you see what analyst assumptions are just for the next 3 or 4 years out on Intel for their earnings, that might seem actually ridiculously low. But if you go with a lower number, it factors in that there might be some years where they don't meet expectations or they have a bad year like they just had, somewhere in the next 10 years that throws down the average. You've got to take those things into account. 10 years is a long time, okay? And so you can't just assume, they'll make 20% a year for 10 years. It rarely goes like that. Now, I'm also giving them credit for their balance sheet. They have a lot of property, plants, equipment, inventory, cash, etc. on there. And I think, they deserve credit for building up a pretty strong balance sheet. And, I come out with a fair value of right around $40 today. Now, why do I feel good still, even though my first 100 shares got assigned to me at $47? Well, I'll tell you why. So, first of all, my assumptions on what the earnings might look like in the near term back then, yes, I expected there to be, some expenses and, some bumps in the road. But as far as the degree, of course, I couldn't have known like how rough 2022 end of 2022, beginning of 2023 would actually be for Intel. So, of course, being, underestimating that can throw your stuff off. But when you use a higher discount rate, where 10 is the standard, okay. So if I use the standard discount rate, we still come out with a fair value of 45.50. My first 100 shares came in at 47 and I averaged down, right? So that's why I'm actually in relatively decent shape on this, because I start out with a higher discount rate, which means that whatever, might actually be the real fair value, the fair value I use is going to be even lower. So even if things don't go perfectly, I still don't actually do that bad in a lot of cases. And, with Intel, I think this still has a lot of potential because I got my average down. Of course, my cost basis is currently below this fair value. So I'm pretty happy. I'm willing to sit here, be patient, and wait for them to continue to execute on their plans and, see this thing through to fruition. I believe in Intel's ability to execute. I think this year especially, they said they were going to do a bunch of things at the beginning, and I think so far they've delivered on what they said they were going to do. And I don't think you can ask for that much more from management. Pat Gelsinger, of course, got some guff at the beginning of the year for the dividend and everything, but overall, I'm, as a shareholder of Intel, pretty happy so far with how they've handled some of the difficulties and the execution in 2023. And I look forward to seeing what they do in Q4 and, of course, in 2024. That's about all I got for you on that. Do me a favor and bonk that like button if you found this video at all informative. Give me a subscription. It really helps me grow the channel. And join us on Discord, link in the description, to continue the conversation about Intel and a lot of other stocks. Also, catch me every Saturday, 8 p.m. Cashflow Kings Live, link in the description. Later.